Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate filings. Today, we're diving into a report from T-Stamp Inc. And you might say they just earned themselves a passing grade, but only just. Get ready for a story of deadlines, compliance, and a company that barely made it. This report is dated February 21, 2025, so pretty recent, and it's called a Form 8K, which companies use to announce important events to their investors. The main event here is that T-Stamp received a warning from Nasdaq, the stock exchange, back in January. Nasdaq told them they weren't following the rules because they didn't hold their annual meeting on time. Think of it like forgetting to file your taxes. It's a big no-no for companies. This annual meeting rule, called 5620A, is in place so companies stay transparent and accountable to their shareholders, the people who own their stock. Basically, it ensures everyone gets a chance to participate in major decisions and know what's going on. But here's the good news. On February 21st, T-Stamp got a letter from Nasdaq saying they fixed the problem. They held their annual meeting and now they're back in good standing. So, crisis averted, but it was a close call. Now, before we move on, let's talk about something called forward-looking statements. These are basically predictions about the future that the company includes in their report. They're like saying, we think things will go well, but we don't have a crystal ball. The company is warning you that plans might change because who really knows what is going to happen. The company also mentions a bunch of risks that could affect their business. It's always good to keep in mind that these risks can have serious consequences, and T-Stamp encourages you to check out their previous 10K and 10Q reports that describe the risks. Those are the annual and quarterly reports that go much more into depth. The report was signed by Gareth Jenner, the Chief Executive Officer. By signing, he's basically saying that he stands behind the information in the report. So what is the takeaway here? T-Stamp Inc. had a slip-up, got a warning, and managed to fix it just in time. They are dealing with real issues around their financial condition and operating procedures. We could see this event as a small symptom that could blow into a larger issue if they are not careful with these procedural deadlines. That said, they are still listed on the Nasdaq and the shares will continue to trade, but investors will need to stay aware of what is going on with the company's operations and how the company is handling it. The company really has to focus on building trust, and this isn't a good start. What do you think? Are you buying T-Stamp stock? Let me know in the comments below, and don't forget to like and subscribe for more Corporate Decoder.